Okay, this video is going to be over May 21st, which should be the Tuesday of this prior week. So the prior day we talked about, we had a gap down, rally to the moving average, and then pretty much a trading range day. When you have a lot of overlap over here and then over here, and you really don't have any consecutive strong bars other than here, but that's kind of, it's a 50% pullback. It's late in the move, and there's probably going to be profit taking. You have weak bears who would be giving up. They'd be buying back their shorts. You have weak bulls who are finally buying. However, everybody else is expecting disappointment in a trading range. So coming into Tuesday over here, the 21st, we have a gap up. And whenever you have a gap up, the first thing you expect is some sort of 50% pullback. Well, not a 50% pullback. You expect a pullback to the moving average. If you think about it, a gap is saying it's forcing you to buy above average price action. The moving average here, as you can see, okay, I had to pause the video, but whenever you have a gap up, it's above average price action. So that means, it's simple. The market's forcing you to pay above average. Do you really want to pay above average with the bar like this, when you know 80% chance bar 1 is not the low of the day, which means 20% chance bar 1 is the low of the day? So there's an 80% chance we're going to fall below bar 1. It's always in long. If I had to do anything, I'd rather buy than sell. However, I know there's an 80% chance we're going to fall, so I don't want to buy. In general, I want to see consecutive strong bars. If we see this, then in going up, then I'll buy. If we see that going down, I'll sell. But right now, I think trading range. So disappointment, you can see what happened. Bear sold above bar 1, inside bar, and right there. Bulls double bottom. Do I want to buy above bar 4? I would not. It's okay, but it's low probability type trading range. Probably going a little bit closer to the moving average. Okay, mission accomplished. We went below bar 1, so we fulfilled the 80% rule of 80% of days are not. Bar 1 is not 80% of the time. Bar 1 is not the high or low of the day. This is a reasonable buy. It's not a great buy because again, it is a second entry buy. So it's probably always in long above this bar. However, what bar is this? 9 o'clock. However, traders are going to be quick to get out. They're suspicious. We've been in a tight trading range for many bars, for at least 6 bars, and if we were all that strong either way, we wouldn't be going sideways. So let's see what happens. Okay, bulls bought above, but they scalped out. So a lot of traders, if they see this, are going to be interested in, they may get out rather quickly. There's too much risk of a few things. We're trying to hold above yesterday's high when it's probably going to fall below it. Do you really think we're going to get a perfect gap, that we're going to get a gap above the high of this? Probably not. And okay, bulls are trying. So what happened here? The bulls have tried 3 times, 1, 2, 3, to get below yesterday's high, and they're failing. The bulls that bought above here held their stop, so now we have a double bottom, and now we have a bull bar. So tight trading range, really not all that great price action. Even you can make the argument buying above. If I had to do anything, I would buy, but this is just not great price action. The risk is big. Traders that are buying stop down here. 1 times the risk is here, 2 times the risk is here. It's really just not all that great. This is a warning of trading range price action. So, and just to kind of show that, let's pay attention to the open of the day. So this line right here, it's going to be the open of the day. I'll change the color in a minute. But anyways, bulls that bought, disappointed. Maybe a surprise bar strong enough for a small second leg. And there's your second leg. Okay, so now we have a breakout. So we have 2 legs up. We're breaking above the high of the past many bars. Let's see what the bulls get. That bar is good. However, it's a weak signal bars here and here. High 1 buy. It's good, but it's not impressive. This is impressive. We're not getting that. So let's see what the follow-through looks like. Okay, doji. So rather than the bulls buying into the close and at the close, they scalped. So Again, probably going a little bit higher, probably strong enough for a second leg up, may get a measured move of this range, but it's not impressive. Okay, now we have another big bull bar. However, what did we get after this bar? Bad follow through. So it is always in long. You can buy for any reason, but you got to be aware. Possible 3 pushes up. 1, 2, 3. Probably will get bad follow through. Bad follow through. Okay. Micro channel. Can you get out of shorts? You certainly can. You certainly can get out of longs. I wouldn't necessarily go short. Pretty tight channel. Maybe trying to form a small pullback bull trend. Arguably a gap here. Maybe, but it's kind of, if you ignore that bar, a gap here. And we may get 50-50 chance we get another second leg. And there's our second leg. But if you notice, we're not getting consecutive bull bars. And we're starting to get a doji. So bears making money above bars. I think we're going to pull back. I think, I think this is a reasonable sell. Bears will sell, scaling higher. What about the always in bulls that got out below? I don't think they buy again anywhere over here. If you got out below, you get out, you take your small profit or your kind of break even, and you just wait. You're not missing a lot. It's kind of like buying here. You're just not really missing a lot. And there you go. What happened here? Well, bears, they sold here. They scaled in higher, and a lot of bears said, we went sideways for many bars here. It was reasonable to sell here and scale in. So I bet that a trader sold more here will at least get out break even. Probably will make money at this high. Should now be an inside bar. It's a trend line break and consecutive buy climaxes. Probably a strong enough surprise bar that we'll get a second leg down. So I would not buy above that bar. If anything, I'd probably sell above it. And I still think we're going to get to the moving average, and we may close this gap. Okay, second leg down. Probably going to close this gap right here. It's still always in long, but, always in long for what? This is probably a trading range day. It's probably trending trading range. Sideways, breakout, sideways. So, maybe we'll test up to here. But these are not strong by the close bar, so I'm less suspicious that we have to test up here. Maybe bulls will buy this low and scale lower, so maybe we have to test the low of this bar at 10 o'clock. But we're alternating. The bears want an endless pullback. They want a parabolic wedge, endless pullback, and a break below the low of the day and a measure move down to maybe yesterday's close. The bulls want a 50% pullback in a rally. Right now, I think trading range. Okay, consecutive bear bars. We closed the gap. So bear sold here, scaled in, mission accomplished. Probably around a measure move down to this bar. We're pretty much at the open of the day, close enough that we'll probably have to touch it. And so I would not be interested in buying tight enough channel. The first versatile should fail. We went up for a few bars, we went down for a few bars. So I think we're going to go down for a few bars, maybe spike in channel, and then just go sideways. I think there's less of a need to. I don't think we're going to get a big move up or down. Okay, so starting to rally, but like I said, we went up, formed a trading bull leg in the trading range, bear leg in the trading range. Probably going to form a bull leg. We'll probably test this high. We may have to test all the way over here, just as I said. Okay, so tight channel, first down should fail. Probably go a little bit higher. And let's see here. So we're touching the low of this bar. Okay, we went above it. So the bulls that bought this low at 725 just made money, 750. So not really a great always in day. To say the least. Trying to form a small pullback bull trend, but there's no energy. You're not missing anything by, I would certainly not try to force anything with this. Just too easy to lose money. Maybe we'll go above and you can sell. Second entry short, one wedge, 1, 2, 3, maybe a failed breakout of a wedge, second entry short. At the high of the day, it's a reasonable short, but very tight channel, so probably minor. Consecutive bear bars, I would probably always in short, I'd definitely get out of longs. But, it might be a 50% pullback, and you may have to test up here again. Okay, we have a second leg, 2 legs down, and looks like we're again testing the highs up here. Immediately turned down, probably just forming a trading range. There's just, we're at the end of the day. So, for always in, the first reasonable always in trade above 9 o'clock right here. Maybe some traders will get out below here. However, if you're buying, the reality is I probably would not get out below this bar. And the reason's simple. If you're buying for always, then you're buying for a swing, and you're buying in a tight trading range. So you expect a deep pullback, and your premise hasn't changed. Bulls buy above, probably hold through the pullback, and you get a second leg up. So if I do anything, I'd buy above. Maybe I'd get out below here. If I didn't get out below here, I'd probably get out a few ticks below there. Bears, can they sell this close? Probably. It's probably okay to sell the close. Better to wait for a second entry, maybe below this bar right here. Never really became always in short, so, where did bears get out? Probably 3 consecutive bear bars, above 11.10. That's probably where I would get out. If not there, maybe either above 11.10, maybe the high of this bar. The problem you have is it's 3 pushes down, and it's not always in short, and you're at obvious target. So I would probably get out above 11 o'clock. You're very close to the open of the day. 3 pushes down. If not there, 11.10, pull back. Maybe the bulls buy, not really all that clear. Maybe they buy above here, but again, it's just not that clear. So the probability is not that great. You're in the middle of the trading range. Bears can sell below here. They can sell after, I really wouldn't sell down here. It's 50% pullback. It's tight enough channel. You're probably going to form a trading range, which means you'll probably get a deep pullback and go sideways. So really, I don't know. I guess if I sold here, if I did sell here, I'd get out above here. I wouldn't do that. I think it's so easy. It's just not worth it. It's not worth swing trading in a tight trading range. You'll just lose money. So I wouldn't do it. So limit orders, everything's a limit order. Traders sell above, they buy below. They sell this high, scaling higher. They sell 10 cents above. They even sell above here. Then we get this breakout kind of scares traders. Traders don't want to sell up here because they expect another second leg. So another big bull bar, And by the way, for traders that sold this high, a lot of traders would get out at the close of this bar or on a slight pullback. They'd get out break even because that's a lot of momentum and there's too much risk of more up. Same thing with here. So I hope that makes sense. For the next day, what do traders do? So we have a gap down. Here's yesterday's low. Okay, broke below yesterday's low, trying to turn up. So always in long above bar 1. However, the tail on top kind of makes me suspicious. If I had to do anything, I'd buy above bar 1. But just like over here, 20% chance it's the low of the day, so it's not really a great buy. Better to wait for consecutive bull bars. Okay, and a trigger, now you have a low 1 short. If I did buy above, I'm not getting out below the bar. I'm just going to hold. And you guys stopped out. That's exactly why I don't like buying bar 1. It's just there's just too much risk. There's 80% chance you're going to lose. And you also have the problem, since traders know that bar 1 is probably going to trigger and probably going to fall below, instead of buying above bar 1, a lot of traders will sell above bar 1 and take profits below bar 1, which means a lot of bulls, instead of buying above bar 1, are going to buy at the low of bar 1, betting that they can buy here and get out here. So think about it. If I could do 2 things. I could sell here for a scalp. If we get another big bull bar, just exit for a loss. I could sell above this bar and I could either take profits on the scalp or I could take profits at the low. But a better trade is I could do it one way. I could buy this low, set a target up here, stop down here, and I get filled. So that is the problem. A lot of traders, it's a limit order market. They see it as a trading range, just like over here. Rather than buying above here, they'll buy at the low and set a target up here and get filled up here. So anyways, I wouldn't sell below bar 1, bar 2, trying to form a double bottom. Probably going to get try to get an early low of the day. We're at yesterday's low, so I may try to form a trading range. Big bull bar, probably always in long, but you got to wonder about the bad signal bar, and you really have to wonder. You got to wonder, it was reasonable to sell the high at bar 3 or bar 4. So at the end of the day, traders may make money selling here and selling a little higher. Strong enough bar, surprise, odds favor second leg up. So if I'd do anything, I'd buy, but it's not great. Probably 50% pullback. Not a big entry bar for the bulls that bought the close of this big bull bar. So 9 o'clock's, this bar's not great, which is why the bad follow through. But odds favor small second leg up. I don't think traders have to get out below the bar. They can, or they can wait for a few bars. I don't think traders have to get out below 905, probably at least a small second leg. But if we close this gap, it'll be a sign that we're in a trading range. Okay, looks like we're closing the gap, and there we go. So rather deep pullback, close the gap. Bears clearly made money by selling this high, so we're in a trading range. This is just not a strong trend. And then we get this huge bull bar. Clearly news related, but it doesn't matter. I'd get out at the close of that bar. That is a statement by the Bears. The Bulls were just really unable to close up here, which means even if we go back up to here, we're going to probably stall. So I would just get out. And even if we have an inside bar, I'd get out because the odds are we're going to go sideways. 3 pushes up. I would definitely get out below that bar. Aggressive traders will sell. Kind of a micro double top. You can call it a wedge top, micro double top. It doesn't matter. Strong enough breakout. Odds favor the second leg. Probably a little bit of surprise. Odds favor at least a small second leg. We got that. Bulls get out below. Aggressive bears sell. Stop up here or here. Big bear bar. Trying to become always in short. Probably need a little more. Trying to form a double bottom. However, not great. Trying to break below yesterday's low. Maybe trying to test the open of the day. It's not great price action. If I would definitely take partial profits. Too much risk, we'll get a deep pullback. So always in. Again, not great. Odds are first reversal up should fail. Okay, I'd get out above that bar. We have double bottom. We tested the open of the day. Looks like a trading range. We've tried to break below the low of yesterday several times. Here, and here. Probably going to find buyers. So I'd get out. And okay, there you go. So trying to find buyers. However, getting a lot of bear bars. The Bears are certainly making it difficult for the Bulls. And if the Bears are making it difficult for the Bulls, that means the Bulls are not willing to buy, as they're making it difficult. And if it's harder to buy at obvious support, there's a greater chance of a bear breakout. So if I was short, I'd definitely get out above. Aggressive bulls can buy. Stop below here or here. It's a double bottom. Not really a great buy. You can certainly, fairly tight channel, you can certainly wait for a second entry. Okay, trend line break. And, again, look at the overall market. Not great. This is why you certainly get out of longs, and this is a problem with trading ranges. They go up, then they go down, and they're just not really all that clear. So what would I do here? Well, we have a second leg up. Would I buy up here if I didn't buy down here? Probably not. I'd probably like to take profits up here. I don't think we're going much higher, and that's exactly why. There's reason, we're testing up here. Big tail, so big rejection in price. So let me kind of explain that in a better way. Trying to kind of lose my thought here. Tight channel. Bulls. Some bulls will buy above, other bulls will not. However, what are the bulls expecting here? We don't have good signal bars. Just like over here, bears sell this high, they'll sell this high. And we have a weak follow through bar here. We have a pause here. We have a big bull bar here. But at support, terrible follow through. So traders are going to sell here, and they're going to, probably put a stop up here. Some traders are going to sell here, sell more below. It's just not great price action. You do not want to be. You certainly do not want to be buying into bull strength too high in the range. Okay, starting to go sideways. So not really great always in trading for the rest of the day, probably. Getting lower in the range, you can buy, but again, I would not. It's It's not great. You may get a bear breakout. You got to think about it. This is kind of a statement. This is a reasonable swing. Probably going to get a few legs down. Not really all that great of a buy. Tight trading range. If you did buy, I'd get out below that bar. I'd get out maybe below this bar or this bar. So it's still on the swing short. Starting to form a tight channel. Some bulls will buy here, betting on a wedge bottom, but awfully tight, so I'd be quick to get out. And for the bears, they get out of shorts below here. If not, definitely here. Some bulls will buy here, but no real rush to buy. And there you go. So pretty much tight trading range. Some bulls will buy the second entry, but what do you do over here? Do you buy here? And if you bought here, do you get out below here? Maybe. The problem with this day overall is this right here. Let me just go to the end. You're right back to where you were. So don't get trapped into thinking, here's the problem with these days. When you're trading always in, you got to think, oh my gosh, I got to get in the market. I'm missing this move. I've got to buy. And then 10 bars later, you're back to here. So you don't want to, if you're in the middle of the range and you don't see a lot of strength, don't enter. It's a limit order market. So hope this video helps.